I'm really feeling very bad right now for Michael Saylor. I'm wondering how Michael Saylor and his investors are feeling right now about what's going to befall MicroStrategy stock after January 15 in this year 2026. Of course, the company has rebranded its name to Strategy, but I like to refer to it as MicroStrategy because that's how it is widely known, at least for now. So let's talk about this company that has built its entire identity around buying Bitcoin and why MicroStrategy will be on a very shaky ground after January 15, 2026. To understand why 2026 looks very fragile for MicroStrategy, we need to first look at some backstory and review current concern to MicroStrategy company. Firstly, do you know that in 2025, MicroStrategy stock dipped about 49%? And that wasn't a small pullback, it was sustained selling that pushed the stock price to its lowest level since late December 2024. And at the dawn of 2026, that pressure isn't gone yet. In fact, there is a new risk sitting right in front of the company on January 15, 2026. So we will get to that later. But for now, let's talk about why MicroStrategy stock struggled so badly in 2025. It all boils down to how exposed MicroStrategy is to Bitcoin. Remember that MicroStrategy is the largest corporate holder of Bitcoin in the world. The company owns about approximately 670,000 Bitcoins, which is roughly 3.2% of the total Bitcoin supply. But guess what? To build that position, MicroStrategy spent over $50 billion, mostly funded through debt and repeated stock sales. But when you bring the company's original software business into the picture, you realize that the company's software division only rakes in about $450 million on a yearly basis. So with that, the balance is clear that MicroStrategy is no longer a software company that owns Bitcoin, but instead, and funny enough, MicroStrategy is just a Bitcoin balance sheet with a software business attached to it. How does that sound? Crazy, right? So when you look at how MicroStrategy stock performed relative to Bitcoin, like take for instance in 2025 when Bitcoin finished down about 5.7%, that wasn't the explosive move that investors were expecting. So because MicroStrategy trades like a leveraged Bitcoin proxy, weak Bitcoin performance translated into much deeper losses for MicroStrategy. In fact, the last 6 months of 2025 alone, MicroStrategy dropped around 66%, wiping out nearly $90 billion of its market value. Not only that, MicroStrategy recorded an additional $17.4 billion unrealized loss in the fourth quarter after a sharp decline of its value in its Bitcoin stash. That tells you how adverse MicroStrategy stock can go south in the bear markets. Now that's just the first underlying concern. Now let's go further to the second underlying concern because this is where valuation comes in. So at current level, MicroStrategy holds roughly $59 billion worth of Bitcoin, but the entire company is valued around $49 billion. This means that MicroStrategy stock is trading at a 20 to 25% discount to the value of the Bitcoin that it owns. It's very important to take that into consideration because for years, MicroStrategy had traded at a premium because investors were always willing to pay extra for leveraged Bitcoin exposure. However, in 2025, that premium shrinked and collapsed, and MicroStrategy stock is now trading at a discount. Now, at the same time, the company continued to issue shares, which diluted the existing shareholdings, and that dilution added more pressure to MicroStrategy, especially as confidence weakened in the company's business model. So what did MicroStrategy do? The management of the company resorted to assuring investors of its strong Bitcoin balance sheet. The management thesis to investors is that even if Bitcoin falls to their 74,000 average cost, the company will still have nearly 6 times more assets than convertible debt, such that in an extreme scenario where Bitcoin dips to 25,000, MicroStrategy claims that its ratio of asset to convertible debt will still be above 2x. So amidst all these challenges, the stock price decline, weakened investor interest, and diluted shareholdings. This tells us that survival is not MicroStrategy immediate concern due to the management confidence in its structure of assets to convertible debt ratio. Now that we've reviewed all these underlying challenges, let's get right into what is coming in January 15, 2026 and how that poses significant risks to MicroStrategy. Do you know what it is? Or can you guess? Alright. Here's what it is. Morgan Stanley Capital International, also widely known by institutional global investors as MSCI. This company is considering a structural change in its indexes that would reclassify companies whose digital asset holdings exceed 50% of total assets. I'll repeat that again. Morgan Stanley Capital International, MSCI, is considering a structural change in its indexes that would reclassify companies whose digital holdings exceed 50% of total assets. So what this means is that in the MSCI indexes, any company with digital asset holdings exceeding 50% of total assets would be classified as a fund rather than as an operating company. And if that happens, these companies are going to be removed from the MSCI major equity indexes. And guess what? MicroStrategy clearly falls into one of those categories of companies that are going to be removed from the MSCI indexes. And this structural change is going to take effect on January 15, 2026. Now, this is very important because according to JP Morgan estimates, MicroStrategy exclusion from the MSCI index could trigger up to $8.8 billion in forced selling from large ETFs and passive funds. Why? The reason is simple. Because for an ETF or institutional fund to track the MSCI index, they must hold the same stocks, usually in the same proportion and weightings as those listed in the MSCI index. That is why large ETF and pension funds will have to sell their MicroStrategy stock holdings if MicroStrategy gets excluded from the MSCI index. And you can tell what the result will be after that. This means that MicroStrategy is going to experience very significant outflows, not because of sentiment, not because of Bitcoin, just because Morgan Stanley Capital International structural change is going to force funds to sell off companies whose asset holdings have over 50% of digital assets. So when you zoom out, of course, it is clear that MicroStrategy and Bitcoin are off to a strong start in 2026, just after MicroStrategy's stock has struggled in 2025. Now in 2026, the company faces a structural risk that has nothing to do with Bitcoin price. The MSCI decision by the 15th of January 2026 will decide whether MicroStrategy stock stabilizes or faces a renewed wave of selling. That's why January 15th really matters to Michael Saylor and his investors. Alright, that's it for today. I'll catch you on the next one.